Hello, guys. Welcome back to another great stream with myself and AJ. Got quite a good one. So we're focusing on the 200 moving average, seeing what is actually going to happen with that. Also, just a quick heads up, and I'll probably deliver the news in 4 minutes. But the European Central Bank are coming out with their rate decision, and also just kind of mainly looking at technicals, covering off the fear and greed index for today. That's what we have in store. AJ, how are you doing today?
Yeah, I'm doing well, thank you. As you said, we're going to be looking at that 200 MA. Previously, it's been major support, and now it's going to act as major resistance. So we'll be taking a look at that.
Exactly, we will. So, look, guys, I'm just going to quickly jump in. Like I said, in 4 minutes, I'm probably going to interrupt whatever it is or where we are, just to show you. And I think also we'll have a look at the we'll bring up Bitcoin in terms of the technicals as well, so that we can see if there's any live reaction from the European rate, which obviously we always go through the US one. Let's see if Europe is actually going to have an effect on the price as well. So I think the primary reason here, and obviously, me and AJ have been kind of following this, is that yesterday Tesla had their earnings and it showed that Tesla had sold 75% of their crypto holdings. So, and that was during Q2. No one knows exactly where, and they haven't disclosed that yet. So we don't know if that is in like a huge profit or they literally just sold it before they had to report. So no one exactly knows whether it was in a profit or not. But the effect it's had on the market, and also I guess just because we had to have a bit of a pullback, didn't we, AJ?
Yeah, definitely. The indicators were getting very overextended. So, a little pullback is something that, I have been anticipating. And I do think, there could be an even more, percentage pullback potentially. But, I'll look at that when we get onto the charts.
Exactly. And we mentioned that yesterday as well. So just today, we also mentioned yesterday the fear and greed index. I think it was at like 39 yesterday, was it, when we went live? I know it
Yeah,
like kind of changes,
yeah. Let me
obviously. But
update it. It was 31 yesterday, sorry. So
was
it's
it? Okay.
34 today.
Okay, so it's going in the right direction. I had a little brain fart there, but yeah, it's going in the right direction, which is obviously very good. This is the direction we want to see it in. We want to see less fear. We want people to get excited. We want people to begin buying, most importantly. And then that's obviously going to be good for us. But like I said, so the reason why we haven't ever covered the European Central Bank decision is just because they obviously, well, you can see here that zero. They haven't raised their rates yet. So everyone's been talking about the US raising their rates, which is a very, very good thing. But, well, bad for the economy in the short term, good for the economy in the long term. And that's really the main market that influences the world. So just having a look at what this throws out, it's going to happen in about a minute or so. So obviously stay tuned for this. But yeah, it's only at 0.25. So even with this, I think that we're going to see inflation across Europe really kind of curtail continuously right into Q4, maybe even Q1, maybe Q2 of next year. So I don't think that's going away anytime soon. In the UK, I think it'll be slightly different because they have been raising their rates. I believe they're at 1.25. AJ, I don't know if you're aware of exactly what that figure is.
I think you might be right there. One point. I'm not 100% right. I think it is 1.25. Yeah.
Yeah. So yeah, this is now looking at just the European economic area, should we say? The Eurozone. But on the US side of things, we have seen that there is this is a 75 basis point hike, 61% probability. So the probability of a 75 basis point hike is actually decreasing, as you see from yesterday. It kind of shot up last week. But now we're getting into the thick of the earnings. And I think now we're kind of seeing, I guess maybe more people, either they want, but they kind of feel as though we're moving back again more towards that 100 basis point. Because I remember a couple of last week it was at 82. It was almost guaranteed. And then it dropped to like I think it was like 20% at one point, and now it's slowly on the way back up. Let's quickly jump in. So check this. So they did a 50 basis point hike, which is good. AJ, should we have a quick look at the market, see if there's any immediate reactions that we're getting there from. So if you just brought
Let's
up and
have
see
a
on
quick
Twitter, they
look.
sold at
If you bring up my
29 and
chart,
bought at 31. Oh, good.
have a look at the
Oh,
1
sold at
minute.
29. Oh, so they actually lost money. One nice one, Charlie.
Yeah, so I did just have a look at that. I'll bring up the charts now. Here's the chart. So I did just have a quick look at sort of what Tesla bought at, and the average cost per coin was $31,620 that they bought at. So we will have to see, when they release what price they actually sold at.
Yeah, because the thing is, like they do when they scale out of a position, you can't just drop $900 million worth of crypto, Bitcoin on the market. Is this on Bitcoin here, AJ, that we can see on the chart?
This is on Bitcoin, and this is the 1 minute chart.
1 minute time frame. Okay, yeah. So we'll just see if there's any. Yeah, there seems to be a bit of a sell off in the Bitcoin price, which again I think that's probably because it's maybe like bad for the markets. But I don't think it's going to be as reactive, should we say, as the US, because obviously the US is just a much bigger market. But interesting though to see a little bit of movement on the back of that news. But again, higher interest rate is actually good for the overall economy in the long term. It means inflation is being tackled in Europe, so it is actually a good thing for the markets, and it means that we'll get rid of inflation and we can start investing in Bitcoin again. Stop becoming mad crypto heads. Exactly. But there you go. I'll let you kind of take over and have a look at maybe some of the wider. Some of the larger time frames, I should say.
Yeah. Okay. So let's dive in. First of all, I think what's this is 4 hour. I will start off with the weekly. Let's start off with the weekly then. Actually, no. Let's go on 4 hour. Start off with the 4 hour then, and then I'll get into the weekly because that's where we are looking at that 200 MA. So starting off with the 4 hour then. What we are looking at right now is this level here. Now I have it marked as resistance. It was previous resistance, but as of right now, it is going to act as support because we are, we were above it now. As of right now, we are testing it. So what I'm looking at here is this support level right now that we are testing. As you can see, we are testing this level as of right now. Previously, we have used it as resistance. Right here, we used it as resistance literally to the dollar. And previously, before, we have used it as more resistance. So right now, this is a very, very key support level that we are looking at. And this lines up with that value VPVR value area high, which I've been talking about as well. That's sat at just this level here. So there is lots of support coming in at this support level here. So there is a possibility, that we could see a nice bounce off of this level. Another thing that I am looking at is this channel. This you can see this white horizontal line that's going, diagonal line that's going across the screen here. Both of these. This is a rising channel that Bitcoin was trading within on that 4 hour. Now you can see we have used this as major resistance when we were below it, and then we did get that break to the upside. So hopefully, we can find some nice support along this level. Again, lines up perfectly with this previous resistance, which is going to act as support, and this VPVR value area high as well, which is going to act as another support level. So it would be nice if we could, find a nice bounce off of this level. It could be, if we do see a nice bounce, it could be, a nice potential long position if we are looking at the indicators as well. The stochastic RSI down here is, in that oversold territory. The stochastic is getting into that oversold territory. But the RSI is sort of in that neutral area. When the RSI is in that neutral area, it doesn't give us a clear indication of where the price could be going. So as of right now, it's a bit unsure. The RSI is, a bit unsure of where the price is going to go. We could see the price continue to increase, become overextended again, or we could just see the RSI and the price, continue to pull back, meaning that we would break this support level here. If we were to break that support level here, then we would be looking at this next previous resistance level here, which I actually need to change to support because we are now above that level. So it is going to act as support. So as you can see, when we were below it, lots of resistance at this level. We did break above it. When we broke above it, we came back and tested it as support and then got a really nice bounce off it coming up to this previous resistance level here and breaking above that level. So this is going to be the next level. If we do break this support level here, this will be the next level of support that I will be looking at. I've just changed that back to resistance. There we go, back to support. And this, support level also lines up perfectly with the main area of the trading range on the VPVR, which is this red line here. You can see along here, it lines up perfectly with this support level. That is also going to act as very strong support as well, because that is the strongest and the highest point on the VPVR. That is going to act as support. Lining up with this support level is just more confidence for me in this support level. So again, if we do break this support level, we do have this support level here to watch out for as well. Now, this second support level here does actually line up with another chart as well, and that is the daily chart here. As you can see, we did break to the upside out of this bear flag here. This is invalidating for me that price target, which was down at approximately $12,000. Now, I did think, there was a pretty high possibility we could break towards the downside because the previous bear flag did break to the downside and we did hit that target. But luckily, we did break to the upside. Now, this is very bullish for us, but we do need to hold this previous resistance as support for it to, be a confirmed break towards the upside. And that is what, Bitcoin is looking like it wants to do as of right now. It looks like it wants to come back down and test this previous resistance as support. And if we can do that, that would be, great news for Bitcoin. And if we can get a bounce off that level, that's even better. And that will, completely invalidate sort of that $12,000 target for the time being, for this pattern. We could see another pattern form, which could take us down to sort of those lower targets. But as of right now, this pattern has been invalidated, and this is the only technical pattern as of right now, which is indicating to me that we could have gone lower. Now, we do have to remember, fake outs are something that do occur. If we do get this fake out, we break back down into this bear flag here, then that bear flag is potentially back in play if we do come back down and test the support. So we do have to watch out for that. And normally when we do see a fake out, a move to the opposite direction is pretty much almost certain every single time. So hopefully we can find this, find support at this approximately $22,000 level. That lines up pretty well with this support level here. The top of the support is sat almost around $22,000. This is on the 4 hour, remember, and this is on the daily. Sorry, go ahead, Ben.
I was going to say, so when you're looking for a fake out, so at the moment we could be in the process of a fake out. So, is there anything that you look out for? Is it usually like a very reactive, like one candle up, one candle down on the daily? Are there any things that you look for in particular when you're, to find out if it is a fake out or not, or do you just wait for confirmation?
Well, the confirmation sort of for me would be, a candle break below this level because it has been such strong, even support on the lower time frames. We found support back here, but because it's been such strong support on the daily and this channel has been respected so well, looking at the support here as well, I drew this. I drew this channel, this bear flag, this channel back when we were testing, where we were getting the support on this at this point here, and then we in fact came and tested this line that I drew perfectly. So we have been respecting this level perfectly. So for me, a break below this previous resistance, which is now going to act as support, will give me that confirmation for that fake out. But then obviously, we wouldn't be, acting off this break below. We would want to see the price come all the way down to the support, and the break of this support here would be the confirmation for me that this is, a confirmed bear flag, and this here was just the fake out. So that's what I'll be looking for. For a confirmed fake out for me, but yeah, hopefully we can use this as support. Hopefully it won't be a fake out. Hopefully we can use it as support, and then continue this rally, small rally towards the upside. Taking a look at the indicators, the indicators are indicating to me that we are very overextended. So in the shorter term, over the next few days, I think this pullback is going to continue. The RSI is sat around 56, 57. That has room to come down, but it also does have room to continue to the upside as well. Not much room, but if we saw a nice pump to the upside, that could bring the RSI up here, and then we could start looking at more of a severe pullback. But for me, what the indicators are telling me right now is we are going to continue seeing this pullback over the next few days. The stochastic RSI is very overextended. So is the normal stochastic. So for me, these indicators resetting and coming back down to sort of that oversold area, whilst the price continues to come down, hopefully finding support along this level here, then we can start looking at the price bouncing off that level and then coming higher. That's what we want to look at. But we were talking about this off camera as well. That 200 MA, that's sort of the main focus for today as well. And if we take a look here, that pi cycle bottom indicator again, that's still we've still flipped. So this is incredibly bullish. This has signaled that this right here, this bottom that we found here, is that bottom. But we will have to see if this continues. It has predicted the bottom twice before, so hopefully it can predict that bottom again. But again, the 200 MA is the main thing that we are looking at before. Now the 200 MA has been major support previously. You can see back here 2020, back here in 2018, going all the way back to 2015 as well. It's been major support. And we did, in fact, for me, this was going to be a major support level. Unfortunately, we did actually break through that, on the 13th of June. Now, we are, below the 200 MA as of right now. We are consolidating below this 200 MA, and we did come and test it on the week of the 4th of July. We did come and test it, get a wick, but we did see a pretty harsh rejection. We are testing that 200 MA as of right now. Now, for me, because this has been major support previously, this is going to act as major resistance. And for me, it's going to be quite hard for us to get above this level. Yes, we've had, this wick below it, but as of right now, we are seeing that pullback, and we are now just testing that 200 MA. Now, bearing in mind, there are 3 days and 12 hours left of this candle. So a lot can happen in 3 days and 12 hours. We could, see a nice rally towards the upside, or we could see the price, have an even more substantial pullback than it is already. But this is what we're going to be looking at this week. This is the main focus for this week, this 200 MA. If we can get above it, for me, that's great news. We can start using it as support again. But if we can't get above it, and we do see a rejection, then I think a longer period of consolidation is most definitely going to be in play. And then, we're going to come back down a little bit further, and then maybe come back up and retest it sometime in the future. But yeah, as of right now, just waiting to see if this week we can break above this 200 MA, or if we do get that initial rejection.
Yeah, there you go. And to be honest, there's not really too much that's going on in terms of the wider markets that's going to determine whether we do see that or don't. Yeah. Can you quickly bring us on to Bitcoin, but that on a lower time frame? Just in from Gurav that not very much has happened in terms of this ECB rate decision. This is the first one in 11 years, though, I should add. First rate hike in 11 years. Bit crazy that. Obviously, they raised rates after the massive financial crash of 2008 and 9. And then, just went boom. Let's keep rates very high for a long time. So where did we begin to see this? This is
What time did it come out again?
15 minutes ago. So three
Okay,
candles behind. This is the 5 minute, right?
This is a 5 minute, yeah.
Yeah. So it's actually been fairly positive,
Yeah.
and that's, I think this may be going to be the trend that we're going to see. So especially in the future, which is next week on Wednesday, by the way, guys, we have the US, the Fed basically saying what their rate hike is going to be. So this gives us a bit of an indication that even during that rate hike, I think the higher the number, the more positive that's going to be for Bitcoin.
Yeah.
And yeah, so yeah, we've also just seen the jobless claims that have been released by the US as well from Gurav. Let me have a look at this today. Okay, so yeah, so like I said, anyway, I think when we get the Fed rate decision next week, it could be that actually it's my doc is absolutely going mad. It could be that the higher the interest rate hike is actually probably better for asset classes, because it shows that inflation will be, like I said yesterday. So I feel a bit like a broken record, but inflation goes down, good for us. Everyone buy risk assets. Hello again to everyone. But yeah, I think that's kind of it, really. Unless anybody has any specific questions, drop them down in the comments. Obviously, don't forget to like the video. Makes me feel real nice and warm inside. So if you guys can do it for me.
I think we'll take a quick look at Ethereum. I think nothing much has happened, with Ethereum since I've sort of given you that update. I told you yesterday that I think, a pullback was something that's most likely going to happen. All the indicators are signaling to me that we are overextended. If I find you, a previous example here, when the indicators were overextended up here, and we did see the price pullback of Ethereum. So I am sort of expecting that to happen again. Indicators are very overextended, and we are getting that initial pullback. Now, where this pullback will go, I am unsure. It could, come back to this $1,400 level, or it could come back all the way down to this very strong previous resistance at around $1,240. Now, this red line here, this $1,400 level, is a very, very important level for Ethereum, because previously, we've used it sort of this level as major support, but also major resistance as well. So this is a very big level, and it's good that we are above that level. It's very bullish that we are above that level, but we just need to hold this level as support. If we don't hold this level of support, then I think we're most likely going to come back down to $1,240 approximately. So that's sort of everything I'm looking at on Ethereum. Nothing too exciting, just that same pullback that I'm anticipating as with Bitcoin as well.
Yeah, because I mean, the thing is, I said this yesterday. I don't think that I don't think that we're in a pump. We will have these relief pumps, and guys, I want you to be aware that you are going to see relief pumps during a bear market. You're going to see pullbacks during a bull market. So just don't get kind of too caught up in a little pump. Because yes, they do happen, but I've seen loads on Twitter. I was actually really surprised. All I was doing was just scrolling through today, and the amount of people who were like, "Oh, Bitcoin's going to go straight to 40,000, and then it will go back down to 36, and then it will go up to 50, and then 60." And I was like, "Wait, what? Have you not forgotten? What's going on? Inflation is over 9% in the biggest economies in the world, and you got. But it was everybody. It was everyone who was like, "Oh, Bitcoin's this," and I was like, "Look, Bitcoin is great, and I like it, but we're not out of the woods just yet."
It's going to take some time to recover, and there's been 12 bear markets since. Let me just make sure I'm getting all my facts right quickly. There has been let me just make sure I'm getting my facts right before I say anything. So there have been, where is it? Since
11 refresher.
1957, there have been 12 bear markets. Okay, and
Oh yes.
every single what's going on here? All right, there we go. Every single time that we've had one of these 12 markets, these bear markets, apart from 3 of them, the stock market has recovered in around 12 months. From the previous sort of highs where it was. Now that hasn't happened 3 times out of those 12 times. And that was because, of sort of global events that were going on. One example was 2008. We all know what happened there, with the real estate market crashing, and sort of the stock market crash as well. It takes time for markets to recover. And if we're looking at this chart right here, you can see that we are consolidating, we are having that slight pump. But if we go back in history, last time, we had the bear market back in 2018, we saw a much longer term consolidation before we got any major moves towards the upside. So how many days did this take before we saw that massive green candle? So that took 133 days before we saw any major move towards the upside. And then before we, to get back close to where we were all-time highs, it took 217 days. If we go back even further, this accumulation consolidation phase took even longer. Before we saw any sort of major move towards the upside, it was around 287 days. And before we got back to where the all-time highs were, that was 721 days. So it takes a very long time for the markets to recover. And as I said, for the stock market, there's been 12 bear markets since 1957, and it has taken, the majority of the time, it has taken a year for the market to recover.
How many days are we on since the last major drop? There's that one massive red candle. Yeah, from there.
Yeah, so we are only 35 days into this.
Yeah, that's so the last one. Obviously, there is going to be a trend of it's going to take ages to recover, and then it will get slightly less, and then it will get slightly less because I think there's more adoption of Bitcoin, more people know it, more people want to buy it. So recovery times will be quicker, but going from 139 days or something like this now to only being in 30 days, I don't think the recovery is here just yet.
No, not just
no. And plus, when we're talking about the stock market, we do also have to consider, people like Michael Burry, for example, they still think there's another 50% drop in the stock market. And I went through that previously as to why, but it's like price to earnings ratio. And now that the earnings are coming out in the next couple of weeks, we're going to see kind of continuous, if they've underperformed, we're going to see that in the stock price, and then the stocks will continue to fall. Risk off kind of mentality sets in. People are buying bonds, they're not buying Bitcoin or anything risky, and so that's then why we could see a little bit more movement to the downside. But I don't want to be like a perma bear with crypto. I do love it, but I just think these pumps, we should be careful, instead of just saying, oh, it's going up, it must continue to go up because I want it to go up. Which I think it's easy to get caught up in that. I do often.
And this is a very important chart as well. I am in the process of bringing a video out towards to all of you that sort of goes in a bit deeper with sort of the stock market, the DXY, and Bitcoin. I have found a very important chart which sort of gives us phases and can sort of help us predict sort of what is going to happen. But the DXY is a very important chart to be looking at, in confluence with the Bitcoin chart and the stock chart as well. So hopefully I'll get that video out to you as soon as possible. But because we are seeing this DXY continue to increase, we are having a slight pullback, which is why we are seeing Bitcoin have a nice little rally. But you know, as we continue to see this DXY chart increase, we are going to most likely see more downside for Bitcoin, or even, you know, consolidation. But I'll get into the details of that, you know, in a separate video.
Yeah, absolutely. No, you're right. I just want to answer a question. I mean, not a question so much as a comment, but Gurav did mention initial job claims for USA announced just now. I haven't found that online. If you could send me a link in the comments, that'd be fantastic. But the whole point about this, and what we need to understand is, you know, news is not just news for the sake of it. It's an indication as to the future. So, what he said is initial jobless claims figures. That's a really weird word, isn't it? Really weird. Like it's absolutely correct. Initial jobless claims. That's like the thing. So those figures show that the USA Fed hike is indeed successful in shrinking GDP, and that basically means more people are unemployed. So there's more people, you know, jobless. That's when you see the Fed go, great success. Your people don't have jobs. You can't just sit back and be like, oh, job well done. But you know, it does show that there is a shrinkage of the GDP in the USA, which obviously is what people want. So that subsequently brings down inflation. Gurav's he's got, you know, I don't know, he's got some good stuff. You know, he's quite a smart guy. But my question is whether 28th of July Q2 GDP print will come out as negative. So it's a really tough one to call. You know, the economy is shrinking. Whether it's shrinking to the point that I don't know. I think probably. I'm going to say probably, but don't hang your hat on it. I'm going to say probably just because inflation's very high. You know, the jobless claims, in fact, are down. I can even just quickly show this. There's a lot of stuff on the screen right now, isn't there? But here, that's ECB. But this was published last week. So initial jobless claims rise to 244,000 versus 235,000 expected. So yeah, there's more people unemployed. So we are seeing this. It's definitely that trend. So yeah, you know, I don't think I think the GDP probably will be negative, but I don't know for sure. You know, it's a tough nut to crack, but yeah, there you go. That is it's everything for me.
Yeah.
AJ, have you got any jokes? Everyone a joke?
No, not jokes. No, I don't have any jokes.
Do you know what? It's the worst thing. Have you ever done that where someone's like, "Oh, tell a joke," and you're like, "Right, well, like, or I don't know what joke." Like, I don't do on the spot jokes.
On the spot jokes, no, I can never do that.
Exactly, no. Okay, all right. Well, look, if no one else has any other questions, we will let you go and enjoy your Thursday morning, evening, afternoon, wherever it is that you are. And say thank you for joining. Obviously, we have a video. AJ, what are people going to be looking out for from yourself? Said that there was a video coming out soon.
Yeah, so it's basically it's a video around sort of this one chart that I've found, and it's about DXY, how sort of how the DXY moves, you know, compared to the S&P and the Bitcoin. You know, they're all sort of correlated in some way, and there's a pattern that someone has found, and this chart, you know, explains it perfectly, and it can sort of give us an understanding of where sort of the price is going to go in the future. So I'll be taking sort of a deep dive into that, and I'll hopefully bring that to you as soon as possible.
Very important. And I personally, I'm going to do a video on Celsius. So, you know, just as a quick overview, they're going to try and mine their way out of, bankruptcy, but give you your money back. No, they're not going to do that. But I'm going to take a deep dive into how it is that this all happened, and now what some of the consequences are, because they are in court and they are essentially getting smashed up by pretty normal people who are like, guys, you need to give me my money back. So I'm going to do a full deep dive into that, how it all happened, and then what the next steps are. So especially if you're an investor, it's going to be very important to know what it is that these guys are trying to work on.
Yeah. One more thing, Gurav said probably we should be ready to sell risk assets on the 28th of July if GDP comes out negative, thus confirming recession.
A recession, yeah. And I think that's probably one of those things very similar to what we saw just now, like an interest rate hike. You know, if it comes out and it's it's bad for the economy. It could be good. So I would say we will probably see a pullback in risk assets if a recession is confirmed. But with that, if we see a recession, then it's kind of good news. It's like, all right, well, everyone's been talking about this, everyone's been worrying about it, pricing it into the markets. If we see that recession, it could pump the market. So I don't know exactly what I would do. So maybe we'll cover that a little bit closer. We've got a week until then. I think what we'll do is we'll wait and see what the interest rate hike is, and then that will kind of guide us into the GDP session. So we'll cover that off next Wednesday and Thursday. As always, guys, make sure you hit the subscribe button, smash the like button, and
we've got 11 likes and 28 people watching. So please smash that like button. It does help us out greatly.
I'm very mad at how many is that? 17 of you. Yeah, and DCA as always. But yes. Okay. Thank you very much, guys. See you tomorrow.
See you tomorrow. Thank you.